YouTube investors, do you want to know how to deduct your vehicle expense? Well, stick around because that's exactly what we're going to discuss today. Well, hello everyone. For those of you who are new to me, my name is Lisa Marie McAllister of Pinnacle Financial Services, and I help real estate investors who fix and flip residential property to save on average $30,000 per year through strategic business and tax planning. Now, for those of you who may be curious, I am both a CPA and an enrolled agent. But before we get started with today's discussion, I ask that you comment, like, and share this video. Also, don't forget to click on that subscribe button, and that way you'll be notified each time that I upload a new video. Now, let's get started with today's discussion. Today I want to briefly discuss the deduction that can be taken for your vehicle expense. Now, there are basically two methods that may be utilized by self-employed taxpayers and business entities in order to claim the deduction. One method is called the actual expense method, and the other method is called the standard mileage rate method. Now guys, if you use your vehicle 100% for business purposes, then the entire cost of operating your vehicle can be deducted against your business income with some exceptions and limits. Now, on the other hand, if you use your vehicle for both business and personal purposes, then you must determine the business portion first before you can deduct the expense. Now, in order to deduct your mileage, you must maintain a mileage record. In the event of an IRS audit, the IRS would want to review this mileage record because your deduction would be based upon the mileage that's contained in it and would be therefore disallowed if you did not maintain this log. Also, there's other pertinent information that must be maintained, such as your number and your percentage of commuting miles. Now, the IRS does consider these particular miles to be personal in nature. And these miles would consist of the miles that you drove from your home to your business or from your home to your client. You must also maintain the number and percentage of miles for business purposes, as well as the number and percentage of miles that pertain to non-business purposes. Now, as stated earlier, there are two methods that may be utilized in order to take this tax deduction. One is the standard mileage rate method, and the other is the actual expense method. And you must make a choice of which method to use. Now, I would suggest that you reach out to your tax strategist and they can assist you in determining which method would work best for your particular situation. It's important to note that your mileage record alone is not sufficient to support a deduction for your mileage. Those entries contained in your mileage log should be supported by other corroborating evidence, such as the amount of the miles driven, the time of day, the destination. So you can just jot down the address of the destination. You also want to make sure you have down the business purpose. And lastly, you want to put down the business relationship. So, for example, if there's an entry in there that says business meal, you need to make sure that you can produce a receipt that shows the time and the date that matches the log entry. This would serve as corroborating evidence. As always, there are rules that must be followed in order to utilize a method selection. And depending on which method that is chosen, you may be able to deduct some of the following. They are as follows: gas, garage rent, depreciation, including Section 179 and bonus depreciation, lease payments, registration and license fees, tires and repairs, your oil. These are just to name a few. Depreciation is allowed each year for an automobile, but there is a cap of how much depreciation can be taken. For instance, Section 280F of the Code limits how much depreciation can be taken based upon certain criteria. While this is a really great tax strategy that can be used by businesses, please consult with your tax strategist to assist you in the application of this tax deduction, because there really are a lot of rules, exceptions, and dollar limits that apply in order to take this deduction. Now, this concludes today's discussion, and I really do hope, guys, that you found value in this video. And before we leave, I ask that you click on the like, comment, and share button. And also don't forget to click on the subscribe button, and that way you'll be notified each time that I upload a new video. I truly appreciate you guys watching this video. And I want to end by saying, if you are a real estate flipper and you don't have a tax strategist and would like me to be your tax strategist, feel free to click on that link below, and I would be most honored to assist you with applying this tax strategy for your vehicle or any other tax strategy. That is my specialty in helping you to save on taxes. Why pay more on taxes when you don't have to? However, the rules are tricky, and you really do need someone that's a tax strategist that can assist you in applying these rules. So without further ado, I'm going to end now, and until next time, goodbye.